Hi, I'm Kylie Matu. Welcome to Wealthy Millionaire. Today we're going to be discussing how you can get involved in the stock market. But first, a disclaimer. I'm not a lawyer or an accountant, and this video is for educational purposes only. So always be sure to consult with a professional before making any financial decisions. The stock market might seem complex and intimidating, but it's actually very easy to get set up and start buying your first stocks. However, while it is easy to enter the market, making the most of your money in the stock market requires serious consideration. Stocks just mean buying up shares or ownership from a public company. When you buy these shares, you're hoping that the company really grows and performs well, so it becomes more valuable, and other investors may be willing to buy them from you for more than what you paid for them. A great way for beginners to start investing is to put their money in an online investment account, which can then be used to invest in shares of stock mutual funds. We will walk you through the basic process of how to open an investment account, decide your budget, explore options available, make your first orders, and manage your positions. By the end of this, you should have knowledge to invest in stocks with confidence. We're going to go over how to invest in 5 different steps. 1. Educate yourself on assets and strategies. 2. Make a list of good investments. 3. Decide on your retail broker. 4. Send your first order. And number 5, monitor your portfolio. First, you want to educate yourself on assets and strategies. Just a little bit of preparation can go a long way when it comes to investing in the stock market. Educating yourself using stock market simulators on the different types of products in the stock market and the different approaches to investing will give you a massive advantage. First, if you haven't already, you should learn what stocks are and how they work. Next, you should learn about the different asset types on the stock market, including common stock, dividend stock, preferred stock, and the many different types of fund products. Once you have a good layout of what's available on the stock market, it's a good practice to begin researching the most common investment strategies. This includes value investing, growth investing, momentum investing, dividend investing, dollar cost averaging with fractional shares, and lump sum investing. This may seem like a lot, but really taking the time to learn the ins and outs of the stock market will give you a serious advantage when it comes to growing your money. You can find the assets and strategies that work best for you and really maximize the potential of your money. So next, we want to make a list of good investments. Now that you have an idea of what you can buy and the best strategy for investing, it's time to start searching the market for your investments. A good approach to discovering valuable companies is a data-driven approach. There are many online resources that create lists of stocks based on certain metrics. The metrics you choose will depend on your asset types and investment strategies. Here's a list of examples: top performing equity funds, fastest growing biotech companies, most consistent large cap stocks, highest dividend paying energy funds. Punching a criteria like this into your search engine will give you several lists of stocks or funds that meet your criteria. Load several of these lists and cross-reference them to find companies that have potential that you're looking for. Next, begin researching the fundamentals of these companies. An important financial metric is return on equity, ROE, which measures a company's profitability. If the ROE is high and consistent, then it's a sign of a healthy company worth investing in. For funds, review the performance of the fund over time and how consistently profitable it is each quarter and year. For many investors, beating the market is a daunting task. You can budget some of your investment towards picking individual stocks, but you can also invest in an index fund to simply track the gains of the best stocks in the market. You can also invest in high-performing asset pools like ETFs and CEFs that are already beating the market. Next, you want to decide on your retail broker. It's important to first understand the stock market, the asset classes, investing in strategies, and to use this understanding to build a list of investments. Retail brokers each come with their own benefits, their features, and market assets. If you already have your investment planned out, then it's easier to choose a retail broker. Before you go searching for your ideal retail broker, you must understand that not all retail brokers are legitimate. Many will offer attractive deals on margin, unrealistically projected trading systems, or similar deals that may seem too good to be true. Disreputable retail stockbrokers have been around for a very long time, and they are often referred to as bucket shops. It's important that you select a broker that already has an established reputation and a large base of customers. Well, there are many more that I'm going to show you, but here's a few retail brokers with comprehensive platforms and established clientele. First, there's TD Ameritrade, E-Trade, Fidelity Investments, Charles Schwab. These are the largest retail brokerage firms in the United States, but there are many more to choose from. Your broker will often be a regional business in your country, and these are mostly good options if you live in the United States. Next, you want to send your first order. All right, you've got a grasp on the stock market, you've picked a list of investments, and you've set up your first retail brokerage account. Now it's time to actually send your first order and make your first purchase. A crucial aspect of investing is money management. You want to ensure that your investing portfolio is well diversified, and you can do this by only allocating 5% to 15% of your portfolio in each of your assets. There are two main ways to make your first order. The first is a market order, which will execute immediately at the current stock price. The second is a limit order, which will execute only when the stock reaches a predetermined price. The first is good if you want to invest immediately, and a price limit will allow you to invest more strategically if you want to ensure a future movement. Select your first chosen asset in your retail broker's investment interface. Enter the fixed percentage of your portfolio as the equivalent amount of shares in your chosen asset. Once you've entered everything and selected buy, then you'll likely get a final confirmation window with the final terms of your order. If everything looks good, then confirm the order and send it. Once the order fills, your account balance will change to reflect the purchase, and the investment interface will start tracking your shares and their profit and loss. Now you're ready to monitor your portfolio. Congratulations, you're now a shareholder and investor in the stock market. However, this is only the first step of investing. What comes next is the careful monitoring of your portfolio and your potential P&L. If your stocks do well, then you'll begin to see a profit. If your stocks perform poorly, then you'll begin to see a loss. A good rule of thumb is to cut your losses early and let your profits run. Remember earlier that good risk management means not holding on to losses that risk around 1% to 2% of your portfolio in losses. It's difficult to pull the trigger on a loss because the actual loss of the money in your account is not real until you sell. However, disciplined risk management is crucial. It's better to take a small loss and continue making profits in the market than to take a huge hit and face a very steep, untenable recovery. Same with making profits. Don't get excited and take your profits early if the general trend is continuing. Let your profits grow until it's clear that the price has run its course. Stick to your chosen investment strategy. If you are a value investor, keep tracking fundamentals and use that to manage your portfolio. If you're a growth investor, then monitor your ROE and ensure that your portfolio is growing quickly. In every case, stick to your strategy and don't let emotions influence your investing decisions. That is the most important challenge for any investor. If you are well informed and disciplined as an investor, then you'll be able to make good profits with your hard-earned money. Let's take a look at some frequently asked questions. Is stock investing safe for beginners? Yes, investing isn't as hard as what it's made out to be thanks to many tools available for help, and as long as you approach it responsibly. Stock mutual funds are an excellent way for beginners to invest in the stock market due to their low cost and easy approach. Stock mutual funds are available within your 401k, IRA, or any taxable brokerage account. Next question, can I invest small amounts of money in stocks? Yes, Most brokerages have 0 account minimums. This allows you to open a trading account without having to fund it first, and in cases, brokerages even have fractional trading, which allows you to invest a fraction of the cost of the entire share price. Though investing small amounts or fraction trading can ease a beginner's initial steps into the stock market, it can also present challenges such as diversifying your portfolio. Diversification involves spreading your money around. The less money you have, the harder it is to spread. Are stock investing apps safe? For the most part, yes. Some newer apps have reliability issues in which the app goes down and users are left without access to their funds. Also, sometimes the app's functionality is restricted, but even in these circumstances, your funds are typically still safe. Are stocks a good investment for beginners? Yes. Investing should be considered a long-term game. A beginner should be comfortable leaving their money invested for at least 5 years, as it's rare for the stock market to experience a downturn that lasts longer than that. I hope you enjoyed this session on stocks. I'm Kylie Mathieu. Thank you for watching Wealthy Millionaire. And remember, the more you save, the more you earn.